I think it's working now. Thank you very much. I hope that there is no echo. Thank you. Welcome back to another live trading session here, that we are looking at this market here. And this is currently, if we look at, it's working. Thank you for confirmation. We are looking at some entry opportunity here in this market. We are in a trend where the market is heading back to the major direction of the trend. So before we look at how we can trade this market, looking at here the bigger picture and also the smaller picture. Now looking at, first of all, we look at, this is gold, and also we'll be looking at DXY to see how the market is trending. Now DXY, we have seen there was a significant drop that we have seen DXY since yesterday. Now the market is in a downtrend. So here along with DXY, also looking at gold. Now gold, as in the beginning of the week, it's working. Thank you for confirming. Now if you guys looked at in the beginning of the trading week, if you look at here, that in our weekly forex forecast also have mentioned that gold potentially going to be bullish, and yesterday also we have posted analysis about this double hammer. All right, so double hammer, and it's after back-to-back forming these two double hammer, the market reverse, and at the moment, as you can see, with this gap open, the price started to bounce back to the upside here in that area. So that being said, looking at this market structure to remain bullish, to remain upside here, and as the market is in a trend, if you look at, this is the monthly price action where the market of this support has created this bounce back to the upside. If you look at here also the weekly, and this is the weekly support where the market has created this move back to the upside here in that market. So it is in an uptrend that you can see. And looking at the daily price action here, we can see the market also showing that trend direction of this daily support level. This is daily support where the market has created its initial bounce back to the upside of this support level on XAUUSD. Now looking at the lower time frame, if we look at the 4-hour and the lower time frame, the market also showing a trend here, and which is in fact a long-term trend that you can see in this market. So because if you look at, guys, here the market started to bounce off this level, followed by this pullback, and we can see this market is in a trend. And from the intraday, this is the 4-hour chart where the market has dropped to that support and reversed back to the upside here. Therefore the market may continue to rise back here. So I'm looking at some important support area here in that market. So with that support, as the market is maintaining this uptrending market structure, and this is what we are looking at this market to maintain its trend back above here, as it is currently moving in the direction of the major trend. And that being said, with this movement here on gold, which is maintaining this uptrend and looking for, if you look at traders here, that you can see this is the 4-hour price action, where with this movement here, this is a complete, if you look at off this level, from this starting of this level here to this level, it's a 4-hour bearish fair value gap. Oh, come on, this some people is trying to okay, so if you look at here, the market is showing that trending direction, which is maintaining this uptrending market structure, and the market has, if you look at here, the price has crossed over from both 10 and 20 exponential moving averages. Now with that exponential moving average, the market is trending and maintaining its uptrending market structure. Please don't spam. It's important that as we are looking at entry now, if you are spamming, then it's very difficult to maintain the proper chat environment. And then I have to turn off the chat because we can't take the spam here. All right, we are trading here, that might cause to enter the wrong trade. All right, so if you are spamming, so if you have an intention to spam, then I would encourage you not to watch that. And by the way, traders, in the meantime, as we are looking at the analysis, and also I'm going to look at after this analysis a trade setup based on the risk management. So if you are entering with me in this trade, make sure you have the proper risk management plan, and also make sure you look at the analysis properly before you enter. And by the way, before I progress with the further, make sure you give a thumbs up, and also you can join the Telegram link below this video for more updated education as well as analysis that you can find below this video. So, and with that being said, if you look at here, the market is in a trend here. 10 and 20 EMA crossed over from each other, and with the 10 and 20 EMA crossed over, which is usually an indicator of changing the trend, right? So we have seen that there is a change of trend of this support. The market has rejected back to the upside with this initial breakout, followed by crossed over from each other. Now, as the market is trending at the moment, if you look at, we are looking at the price to continue to rise back above here to create a new higher high in that market. So here, if we look at the lower time frame, this is the lower time frame here, where we're looking at the market to maintain its uptrend, right? Looking at the 5-minute chart. Now I'm dropping down to very lower time frame here. If you look at the previous daily price action here, and there is we have seen that yesterday core retail sales and retail sales has came out to be lower than the expected, which in fact eventually creating that the market trend to remain bullish, because that has shown that if you look at DXY, now it's on a pullback, but DXY that we have seen, there was a bearish price action on DXY, and this long bearish price action on DXY might create a bullish bias on gold. All right, so this is the gold move. Do you think gold is going to be remaining bullish, or you think that it's gonna break well below here? What's your bias on gold? Also, I'm going to share a poll. You guys see that poll really helps to find out the right direction. And in the past also the pool has helped a lot. So I'm sharing the pool here. So let me share the pool with you. Okay, so what is your bias on XAUUSD with the upcoming news? Okay, with upcoming news, because the news is important, right? Okay, so if we look at bullish and the bearish, all right, so here is what we are looking at for this upcoming session. If you guys looked at the pool in the past, pool has given really good understanding of what the market might be doing. All right, so here I'm looking at so we're looking gold ahead today at what level? Okay, so if we look at gold now, the trend, lower time frame trend on gold is this. I normally look at, looking at the trend also differently is important. If you look at, that's where the real difference will happen. You know what? Because if you look at the trend on gold, most traders, see how you can look at differently in a trend. Most trader, this is a trend, right? Now most trader will look at the trend. Okay, most trader will look at the trend, but interestingly enough, that you'll see more of here rather than the trend, right? So if you look at, this is the secret. Not only look at the trend, first look at what happened before the trend, right? What happened before the trend? This is where the best setup comes. What happened before the trend will tell you how the trend created. Now this is where the market is in a trend. Okay, it's a bullish market structure with a long consolidation in that area, and because there is a long consolidation, the trend breakout is quite strong here, and that's what we are looking at. Because when there is a longer consolidation, there is a higher possibility for bigger trend, and I hope that makes sense to you. And with this movement here, if you look at, the market is in a bullish trend at the moment, and any pullback of this bullish trend, if you look at here, we are looking at that entry. This is the 1 hour price action, and of this 1 hour, the market has bounced back to the upside. Okay, and with that bounce, as the market is in this movement here, there is a significant bearish fair value gap here in that market, and with that bearish fair value gap, the price may maintain its uptrend back to the upside here in that market, and back to back 3 bullish candlestick pattern. Now there is also another, what I would say, that a clue or an understanding of why, if you look at here, this 1 hour larger candlestick pattern form here on gold. All right, now with this larger bullish candlestick pattern here, it is in an uptrend, right? And with that uptrending market structure, as the market is trending in that area with this uptrend, we see that this 3 hours movement on gold is showing that the gold, the volume coming is higher, so they might eventually cross that back to the upside here in that market. And okay, so that if you look at this 3 1 hour price action for on Nasdaq, okay, so along with gold also we do look at some of the instrument after we see that initial move here. We'll be looking at also on Nasdaq as well, right? So have you got an idea? So Nasdaq, this is where the market is. If you look at the Nasdaq, it's in a sideways, right? So the Nasdaq is currently in a sideways, and there might be potential bounce here back above on Nasdaq. However, we are looking at gold, and also we'll go back to Nasdaq shortly after. All right, so here is, if you look at this market, in this level. Now this 3 hours that you can see on gold is highly bullish. Now gold has thought it was about to retrace to around 5045. Yes, so this is basically I was also expecting a little deeper pullback, but what we see that especially these 3 hours here is highly bullish. So what does that mean to you guys? There is something okay. So if you look at in this situation here on gold, right now, especially when you see the market is in a bullish trend or bearish trend, and suddenly after this consolidation breaks out, we can look at some of the factors that is currently making gold significantly volatile, that you can see. All right, so okay, something guys I really want to pay attention here. All right, what it is, let me tell you something. This happens rarely, but this is a rare, okay, and I'm sharing that with you now, guys. This is a rare happening. All right, can anybody tell me what is that rare happening? The Bitcoin. Okay, the rare happening. All right, this is I would like to mention now. Okay, this is rarely happens, but when it happens, need to pay attention. There is a reason behind it. I'll also discuss that, and also I'll, like you guys also look at that. If you look at gold, this is the hourly candle, right? It's a bull candle from the 1 hour on gold. And if you look at the DXY, this is also hourly candle on DXY. So this is for just 1 hour, all right? And if that continues in few hours, there's something that we need to pay attention. Now, what is that? Gold and DXY mirror each other, right? Because they are opposite. XAUUSD against dollar. So gold is spot versus dollar. That means you are trading with, like, you know, that this currency relationship. So you are trading gold with dollar, like against dollar. That means if this one goes up, this one down. If this one goes up, this one down, right? It's a simple calculation. If you look at the X and Y, X divided by Y. If X remain constant, that means not moving anywhere. But if the Y increases, X will automatically drop. On the other hand, if you keep Y constant, but if you increase any of this value, it will also change this one. Now, with that one here, gold spot versus US dollar, right? So that means if DXY dropping, even gold is not appreciating, but gold will appreciate, right? Because this one is getting weaker. I would say the bounce was very much expected. We consolidated for and if you look at, I would say the bounce was very appreciated and consolidated for soon long. A breakout was obvious today. Hopefully we can get a really good pullback with the news and then buy again. Okay, now look, the thing is that if you look at here, I would say the bounce was very much consolidated. A breakout was so obvious today. Hopefully we will get. Now, yeah, there is a pullback is very much possible, right? Which is very regular. But if you look at here, this is what I was like trying to discuss here. All right. Now, though this is the 1 hour, but if it does, okay, if it does, then that's gonna be really interesting to look at. Is in the first 1 hour, if you look at, all right. This is the hourly candlestick pattern, and with this 1 hour candle, which is bull candle, right? If you look at here, it's a bullish candle on DXY. But if you look at the XAUUSD, this is also bull candle in the first hour that you can see. And with this first hour that is showing to be bullish, and because back to back two candlestick pattern showing bullish, this is a very interesting price again, because XAUUSD and DXY, they usually move in opposite manner. That means when there is gold is going to be bullish, DXY is going to be bearish, right? Because of they traded each other's against each other. And so that being said, now let's see that if that trend continues for the next hour, we might see that this market is showing up to be in the same direction, right? That means both of them, if they're moving in the same direction, there is something. Okay, the something is that they rarely happen, but in a time of economic or geopolitical tension when arises, that time they move in the same direction. Right? That's what you could see. And in the meantime, we are looking at here for an entry on the lower time frame. This is what I'm looking at the lower time frame for an entry back to the upside here on XAUUSD, and therefore this is a support level, and with that support here, expecting the market to trend back to the upside to create a new higher high. We'll be looking at lower time frame entry in this market, and with that lower time frame entry, we are looking at for the price to eventually break that low and then to retest and then reverse back again to the upside to create a new higher high. So breaking below to this key support level can be a good area that we can look for an entry back to the upside here in that market. Breaking below and then going back up. Now, for us to look for this entry here on gold, we are waiting for this market to show I have also posted a poll here, guys, to see that where it is heading and which what can do you drive, sir? Do you have sports? What car do you drive? Do you have a sports? No, I drive a ordinary car. Okay, because I don't drive an expensive car. I trade for passion. Okay, so this is what I love to do. I can drive a sports car or many other supercar, but in essence, when you really do something that you love, you don't need anything else. That will give you all the joy and happiness. All right. So, for example, anything we do that we want to experience something better, it basically a kind of chemical released in our brain, right? So that is what people like, being a trader or anything, that's where you want to have it. But I'm a deep diver. You guys seen that? I like to dive deeper. What do you guys up to? Share your hobbies. Do you have any hobbies? What is your hobbies? Here we are looking at in that area. This is a key support level, right? And in that key support, that looking at the market to drop, come further downside. By the way, if you're enjoying the live session, make sure you give a thumbs up and also subscribe to the channel. If you haven't done yet, press the notification bell so that you're not missing any of the content that I'm posting every day. Now, we see that the market is slowly building that momentum back below. We are looking at for the market to entirely break that support, entirely break that low. Now it's approaching that key support level. We will be looking for potential entry at around 5083 or below that level. If the market shows that kind of reaction. If you look at here, you can see this is a head and shoulder, and with that head and shoulder, the market may cross down back below here. And that's what we are looking at, this market to come down to retest and then return back again to the upside. Now this is where we are looking at, all right, because we want to see the market is approaching those kind of key levels before it reverse back to the upside here. Just had a hit on our okay, you see lower time frame here, the market is slowly building that momentum back below. And expecting it to dip down further here to this support level. This is a key area of value. And it's approaching, guys. This is a, if you look at, this is a full body, red body, and approaching that level and may continue to dive deeper here. Deepening is essential. If you look at, you know, always there is old saying that buy from higher high, sell from lower low, but it's all about buying from the deep and selling from the deep as well, right? Because you want to enter a trade from a breakup structure. That is where the key, right? Because if you look at, this is a complete breakup structure that you want to see for an entry in this market. And that's where the best trade comes in play. And I'm also paying attention here on DXY movement. If you look at DXY, suddenly had a bullish bias here in that area, though it is currently in a downtrend. And if gold also showing the similar kind of price action, that's huge. Because do you know what that means? In fact, if you look at, if gold and DXY moves in the same direction, what does that mean? Okay, so that if DXY and gold move in the same direction, it happened few times. I'll tell you in what situation, you guys, so that you can ready to buy or sell with a proper risk management. This is gonna change the way you look at the market. Let's say gold, okay? So what is the best gold buy level? Now, currently we are looking at 5083. This is our current key level. This is what we are looking at for potential entry of this support on gold, right? So this is what we are looking at and expecting the market to respect that level and then return. So this is what currently that we, as per the analysis, that we are looking at for an entry back to the upside here in that market. And this is the current level 5083. This is what we are looking at for an entry back to the upside here in that market. So once we see the price has tested this level with a larger ATR, we will be looking at entry. And in the meantime, also we are looking at some really a fascinating way to look at gold as well as DXY, right? So now if you look at XAUUSD, means that spot gold versus dollar index, right? So that means if we put, let's say this is gold and then you put USD here, right? And then DXY. So understanding when both of these instruments moving in the same direction. So this is gold, all right, slash USD, and this is basically USD without like index, right? Let's mark it as index USD. Now, usually when gold goes up, this one like dollar index bearish, right? They follow in an opposite directional way. Is very simple. If dollar bearish, gold started to trend right up. Even let's say the current gold market as it is, right? There is no buying happen, there is no supply, there is no demand, there is no deficit in anything. It's fully constant. Like no one ever bought a single gram of gold, or no one have ever sold single gram of gold. In that situation, if dollar index goes down, gold will go up, because in this situation, like when you are trading with against dollar. Now, therefore, when they both become like always opposite, right? However, some situation you see that both of them going up very rarely. And when both of them going up, that's really rare, okay? And rare is always valuable. If you look at here, when they are both going up, means that gold and dollar both is in a high level of demand from the buyers. And this happens in very rare circumstances, especially in a situation of sudden geopolitical war or any kind of war situation. In that situation, it happens, okay? Or a very high degree of natural disaster. This can happen in those situations. So when you see that both of them moving, but for short term, sometimes happens. If you look at the 1 hour, gold now coming for a pullback, and if you look at the DXY, it's slowly pushing up for a pullback. But if it happens few hours in a time, you can note that down, that smart money is buying both. So as a retail trader, what you're gonna do, you're also doing the same thing, following the smart money system, right? Now, looking at here on the same way, Okay, it's on a pullback now. Gold is coming for a pullback and approaching that key support level. And that is what we are looking at this market to eventually come down further below to the support and then to eventually return back to the upside here in that market. Okay, this is it form here on gold, a bearish engulfer. This is short-term bearish signal, right? So you will be waiting for further confirmation, but I wouldn't sell at the moment because it's a long-term trend up. So always looking at long-term trend. So trend is the most important part in any trading, and because the market is in a long-term uptrend, we will be waiting for break of key support level before we look at any kind of entry in this market. Here is the move that you can see the market is approaching that key support level. Okay, so this is the 4-hour support at 5082. I'm planning for a possible entry because it's in an uptrend. The market is on the support level. So since we are already seeing the pullback, I think we can see a spike up with the news and retest of the good level and then continue growing up with New York session. Spot on. This is what I'm looking at now because the market is on a pullback, right? So this is the 4-hour move. Starting off this, okay, 4-hour means that each 4-hour candle is crucial because in each 4-hour candlestick pattern there is a volume. Now, a 4-hour candle that I consider in terms of volume is the most important candlestick pattern because why? Each 4-hour candle contains a session. Actually, it contains the whole day's volume. Why? Because the banks or the institutions, they don't trade, like some trade, but most of them place their volume in a specific window. And that one 4-hour candle contains that window. If you look at, for example, when there is a Monday open, okay, the Sydney session, so the banks place their order in that Sydney session's 4-hour candle. So one candle maintain or contains the whole day's volume in it. And that's why when you look at the 4-hour candlestick pattern, it's very important to look, and especially when it is breaking that sessions low, going against the trend is important here. And that's what we are looking at this market structure here. You can see the market is slowly trying to build that momentum back to the upside. I'm still waiting for a little downside here. And I'm preparing also for buying. We have 6 minutes for this 15 minutes candle to close. We still have more than an hour for the data to come up, so we can practice one potential entry during this time period. I'm ready with risk manager tool. Guys, keep in mind that risk management is very important. So if you are opening any position, must use the risk manager tool. That's the key. That's the secret of becoming a successful trader. So I am looking at an entry regardless of my stop loss pip. My risk is very smaller. Okay, if you are trading on a bigger account, then I would suggest 0.25% risk or 0.1% risk if it is a larger account. If it is a smaller account, not more than 1% risk. And I will also explain the strategy behind it. All right, so it's pushing back to the upside here. So 5079 is the stop loss, and TP target setting at, will be taking further to the upside if we see stronger momentum here. And I have a little bit of gap here for this move here, which is 40 pip. If you look at the 15 minutes here, there's 15 is 20 EMA, and it's the first move that expecting it to reverse, because there is a one long rejection here in that market. And let me show you my entry. Stop loss here, 5079.09, and take profit target at 5114.29. Okay, so it's moving in that direction here. Now it might try to deep further, and that's why I keep a little wider stop loss here in case the market is coming for another retest of this support, though it is a strongly bull market, and expecting it to go back to hit this head again, because there was a rejection of this level, and it's a sharply bull market. So we started to see the market is moving back up from our entry. 79.09, no, 96. Now of this level here, we might see some that's where we could see that a deeper pullback here, and this is the 15 minutes candle closing in 2 minutes time. And if you look at this 15 minutes candle, it's had a long wick, right? Anywhere, if this candle closing here, we can expect a reverse back above. I will be explaining later, is because if you look at, guys, from this high, the market has dropped to that support, and there is a gap open here in that area that has given this momentum for this market to reverse back again to the upside to create a new higher high. Might form a reversal or may try to show a continuation. From the 4-hour perspective, it's almost to at entry. Okay. FVG? You mean FVG to the bearish, this zone that you are talking about? Even there is a FVG, but the thing is that if you look at the 15 minutes, here is a gap open and this candle is closing, right? This 15 minutes candle is closing, and because from this top it hit this support, this is a support, with one single move we can expect a reaction back to the upside, and that reaction that we are trading. Now even if the market drop, in worst case, if it come back to the 20 EM on the 15 minutes, expecting rejection, and that's what we are looking at. And with this 15 minutes candle close, you can see we can expect at least potentially 100 pip bounce back to the upside. If it goes for that 100 pip bounce back to the upside, here we will be taking profit. 100 pip will be good move here for us to take profit if the market, which we could see that rejection back in that area. Now there is a fair value gap here, but this fair value gap may fill with after a deeper liquidity sweep here. So therefore there is a higher chance now with 50 minutes candle close the market to bounce back again to the resistance line, and that's what we have opened that position here in that market. So we are 33 pip moving up, and looking at the 15 minutes price action. We need the one single bounce here back above. Getting that reaction back. Okay, so it's on the support, and looking at this lower time frame, So the market is at the support level. So this is the 15 minutes and the market is at the 15 minutes now, 20 EMA. I'm still on it, and I think there is a higher chance for the market to I'll push little down here the stop loss. It's highly likely we could see a rejection. So I will be moving my stop loss at 5077. So I'm moving the stop loss at 5077. It will increase a little bit of risk, but I'm still expecting this market to bounce back up. It's already trying to show a rejection of this because the market is on the support. So I move my stop loss at 5077, and here the market has just broken this support here, and this is what looking to see the price to reject this 15 minutes 20 exponential moving averages and also the other level. Okay, it's getting some rejection of this level. Okay, so it's on the support, and we can see another 5 minutes candle closed. kind of interesting if the market dip further here, and it's on the support level. So this is where I'm looking at to see how the market react to that level. So if it drop deeper, then you'll see entirely coming well below. But at the moment here, it's in a zone where getting the reaction here in that area. Come on guys, this I told you this is getting it entirely broken back below, so I'm out. And okay, so it has dropped. I'll be re-entering again, because this is a market where in a key support level. So this is the price on this key support level, and I'm expecting this is a very important key support level here. That's fine guys. This is a, if you look at, this is a key support, and this market is highly bullish. So we will be looking to see the market trend to keep well below here, and we can at any point we will be leaving the profit target well above. And here I'm going to enter recovery trade here from this level. Okay, and I'm entering this one here at this price section. So I'm holding on to this here. I entered the second trade. The recovery trade, and because the market is has dropped down here, this is the second trade. The first one is 76 here. I'm looking at this one to potentially to work out, and so trading guys, if one doesn't work out, the other one should be covering with a smaller risk here. You know, if this market breaks out, we'll see that entirely going again back above, and if there is an FP, potentially this is a breakout of NFP, right? And this is an order block if you look at here, and I will be holding on to this trade if the market goes in back to the upside, because with the NFP this might be a false breakout, and if this is a perfectly false breakout with NFP, we'll be able to take nearly to 400 pip. All right, and in one trade we can take all the profit that we need for this session. So we're looking at look, this is here the market is already on an order block. You know, in trading let me tell you one very important secret, guys. This gonna change you entirely. Is that if you look at a market or any market that you are trading, you can trade as many trades as possible. Before, many times, probably you have heard that over trading, FOMO trading, revenge trading, right? You can trade all of them. You can do FOMO trade, you can do over trade, you can do revenge trade. But the secret here is risk. You can open, even sometime opening more trade is better than opening less trade. These are some of the true experience that I'm sharing with you that will entirely change your trading completely. As a retail trader, if you're not institutional, opening more trade is better than opening less trade. There's only one reason is human, unless you are using a fully automated system that we have currently. Otherwise, if you are opening trade yourself, that there is a very high chance of error. And the more trade that you will be opening, your probability will increase, because trading is one trade, it's a bunch of trades. So if you look at your results, will be results of like this. Okay, if you bind it, that is your results, a bunch of trades. And those bunch of trade, you cannot separate them from each other. It has to be together all. So therefore, when you open a lot of trades, and then after opening a lot of trades, make sure you keep an edge. The secret here is risk. Imagine that you open with 0.1% risk a lot of trades, right? You open in a day 10 trades. Then how much risk you took? In 10 trades, you took only 1% risk, right? But if you keep trading 10 trades, very high chance that if you, depending on your win rate, if you have a win rate that is over 50%, you never lose 1%. You're gonna gain more than 1%. That's the secret. Okay. Rather, opening less trade creates a stress, because if you open less trade and you risk more and then you lose, and then you feel like, okay, I have lost day, rather than opening more trades with a smaller risk. That's how never consider one trade as your determinant of your results or anything like that. Good day, welcome. Now here it's creating a lot of long wick candles, so we're waiting for the market to potentially bounce back to the upside. Okay, so it has now, with this lower time frame, significantly long wick candles close here, and there is coming up NFP in just a matter of an hour. Some pressure here downside, but I'm still holding on to that, because if this market it has tested the order block, higher chance for another revert again back. It is going to 5099. That's gonna be, in this trade, will be nearly to 370 pip. It's showing up that to be upside here. Don't want to hold anything in news. I think it's still 40 minutes news. I think the market will give us a potential results before the news. We will not hold on to the news, but I think we will see an outcome before the news. It's a good approach not to hold something on news, but sometimes I hold in a situation where the market moved a lot. Okay, so for example, if the market reach near to my profit target, I sometimes hold, because what happened in the past is that, I don't know, it happened to you all know. Let's say the market is here, my profit target is here. I can take that profit, but more often the price will hit that profit target in a, I would say, the 95% situation. If the price is here, your profit target here, the price will hit the profit target. But in rare situation, the market may come down, but what will happen is that if the market want to come that far down, before it coming down here, it's gonna stabilize its spread, so it's not gonna be very risky. But if the market hit the profit target here, many times what happened is that my profit target was, let's say, 2%, it end up giving me 5%. But no, it's not a regular practice. It is general rule is that you take profit, remove your stop loss at entry or little further to the upside, because anything can happen in news. It's a good idea not to hold in a news. So if the market goes up there to the to this level before the news, which we could see 5099, you will be taking that trade, so which will be nearly to, if you look at, if it goes there, it's going to be nearly to 380 p, which is, with the current volatility, is okay for us. 5045 around there. Yeah, 50, you mean downside? 5045. There is a crossover of 5 minutes, 10 and 20 MA, but this is currently the 15 minutes drop is straight drop back to the support level. Now this kind of drop is very unusual, and that unusual drop might bring usual volatility again, and that's what we are looking at, to see the market to return back again to the upside here to create a new higher high in that market. And this is the smaller narrow doji formation here in that, expecting the market to trend back here to the key level 5099 or 5100, which will be a good area that we can look for an entry. Yeah, it's on a reversal, right? So you can see the chances for the market to the trend continue back above here. Okay, I'm on it guys. How many of you are running this trade? You're out? Oh no. Okay, that's fine, because I would hold it. All right, we are up 210 pip, and that will outweigh the previous one. So this is how I'm holding, sir. I'm also holding, and anytime I will be out, I will give a shout out here. So we still have, this is the 1 hour candle close just now, and that 1 hour candle close may bring little volume here, and okay, wanna see an upside. Now with this movement, one more bounce back to the upside, we might be closing with one more bounce back to the upside here, and I'm still holding on to that. We are 245 pip up with this, and it might come down for a deeper pullback. Do you think you can close it? Okay, cool. It's getting up from $1,000 out here, and okay, I'm out. I'm going out here. So this is currently, we have taken with this one 230 pip. Maybe able to find further entry, and so the first one was 175 pip minus. Second one is plus 230 pip. Okay, now it got back up further. it's carrying that directional bias. Okay, it's still showing that the market trend may continue here, and this is what we are looking for, the potential entry later. And if you look at here of this support, the market is slowly building its momentum back above here, and with this narrow doji, they're expecting the market to trend back. If you look at here, you can see there is a significant rejection of that. If we see that another liquidity sweep of this support, we will be looking at more entry later today. It's showing up that the market might remain, but just a little bit of, let's breathe a little bit. Okay, have a little bit of music. Which one you like, guys? Before we look at another entry. Ready for the big one? Let's have one loud music. And then doji like that. Yep. Yeah. Time is to drop $30. Looking for free entry? Yeah, we'll be looking at. By the way, if you are enjoying, make sure you like this stream and also subscribe to the channel if you haven't done yet. Press the notification bell so that you are not missing any of the content that I am posting every day. Okay, so we are seeing that the market trend continues, and we have more to enter shortly after. Okay, so lowering the music, increasing the current entry. We have to revise our expectations. Why not? Okay, so what we are looking at here in 20 minutes coming up, 3 significant news, right? Non-farm employment change. Now this is a pre NFP entry. We can look for also post NFP entry, right? Are you guys ready for the post NFP entry? Now before we look for the post NFP entry, now I'm going to look at a quick analysis here on gold, and also this trade that we have opened, the previous one as well, this trade, the one that you have opened, you guys see that it dropped straight to the order block, and it's an order block entry. Order block entry is essential, as this is a smart money trading. So we are now along with gold, and I'd like to see also the DXY. Right now DXY will give us a bit of understanding of what's happening with the market. So looking at here on the daily price section, all right, so this is the daily trend, and the reason I'm looking at DXY, guys, is when you look at the DXY, you have all the USD pairs because they're direction and also gold direction. So looking at DXY will give us that understanding. Now DXY, this is the daily chart. Always looking at bigger picture is the best way to look at the overall direction in the market. So this is head and shoulder on the daily, right, on DXY. Now that head and shoulder formed, if you look at, this is an order block. So this is, if you look at, this is an order block, this narrow doji of this double top, this is an order block, and the market trended quite a few days down, bounced back to the order block, form this head and shoulder, and with that head and shoulder formation, we can see that finally DXY has started to trend down here, which is showing the market to remain bearish back below here with a gap open, created this movement. Now we have seen that later the price has moved back to the upside with, this is a kind of pullback here if you look at, and that pullback, the market has reached that, the price has moved to that neckline of that head and shoulder, which is support, turn resistance here, and therefore what we can see, the market breaking off that level. Now that break, if you look at, it's a one complete daily break of structure, giving that DXY to eventually trend back down here, potentially to come back to this support level, and that's what we are looking at in this market. Now as the market is trending, if you look at the DXY here, there was a drop, and it might try to break this channel here. That's a key level. And here is support, which is turn resistance, and and with this support and resistance, we might see the market eventually going back up to fill that liquidity and then returning back below here to this support level. And as the market is trending in that direction, we can expect this market to trend and continue to drop here to create a new lower low in this market. All right, so looking at going back to gold now, with the DXY movement that you can see so far here in that area, it is for me a deeper pullback to the upside. And because it's on a deeper pullback, okay, the market is in this deeper pullback, expecting that breaking the trend line and then to trend down here. Now, with this break below here on XAUUSD, a drop pullback, the market is in this area here that we can expect the price to eventually cross this high and then to return again back below. For us to re-enter again, you want to see confirmation, because lower time frame here, it is showing that there might be deeper pullback. That means in that direction. And we want to trade in the major direction of the trend. That is the secret of long-term profitability. So at what level maximum gold may down for today? Okay, so the down level that we have seen, currently we have seen the market had tested the 5050 level. Now this level at 5050, I would say that the market might respect that 5050 level. What's your thought on that, guys? Share your move here, because this level at 5050 is an order block, and the market tested that order block and could reverse again back to the upside with this order block. Okay, it's on this point, and that is current support level at 5050, and I think the market may test that 5050 and could reverse back again to the upside. Okay, got it rejected back off this level, and it's showing up looking for long. Yes, patience is the key. You can see that the market is now having the rejection, as we have discussed that 5050 level is the lowest point, and the market is now slowly building. I would look to go long, keeping this one as potential stop loss, but let the news to come up first, because with the upcoming news the market might spike. Okay, spike here and then could reverse again. Hope we spike down with news so we can re-enter a good buy. Another important, I wouldn't look to buy from the spike because you can't trust the spike. Okay, it can be in any direction. That's another important thing. Interesting fact is that you know what? Why do the market in fact spike in the first place in the news time? Which is crucial to look at. Here's the move that you can see in this area, which is with this movement pullback, expecting the market to trend back here. Now, as I have also posted one poll here. Let's see that. What was the vote on the poll? And 80% bullish, which is good to see that. And you know, I'm ending this poll here just to see that it's really 80% bullish according to there's quite a few vote here, around 69 vote. So this is another, you know, every day I start a poll here with all of you guys. So make sure that you cast the vote on the poll, which is important, because when you cast on the vote on the poll, it's gonna give you a better understanding of how the market really do here. Because interesting fact is that in 95% of the time, poll results came to be true. This is a fact. Now today also you are bullish 80%, and we traded bull, and that has given us that profit target hit. Okay, now at the moment we can see the market is in this uptrend here. With an inverted head and shoulder that you can see, the market is creating its move back to the upside. You see that it's getting the rejection back above. And we are 3 minutes for the data to come up, and that's gonna be here 2 minutes showing. Definitely this is gonna be market mover. And while you can see the XY for short term, it bounced, and I think the data might create significant WTI oil. Okay, it's on a bullish move, and we discussed in the past also. There is a significant trend on US oil, and which is also pushing back above with this inverted head and shoulder. It's breaking back to the upside here, and that might take that price back above here to create a new higher high. And if the data is bullish, if you look at the DXY, is currently going up, and Euro USD that you can see here with this long wick doji. Euro dollar, what this is also eventually a potential move here on euro dollar. Okay, got a spike, and if you look at here, it's it still hasn't come yet. So average hourly earnings 0.4%. Come on, what the other two data is not coming. 130k non-farm employment change, and unemployment rate is still pending, 4.3%. So there is 3 indicators showing almost double on non-farm employment change. Okay, so that data now, how does that that must be pushing. Oh, DXY had a breakout, okay, with this one here. That's a massive breakout with this change in the market sentiment. As I mentioned, data is basically a fundamental contributor. Now this move, if we look at here, let's look at that, how the market is doing. Now it is the reaction at the moment, because the market really react to NFP and FOMC with a rate cut and rate hold or rate hike. So now with the data, it's significantly, you'd say that 3 of them is high, very high, okay, especially non-farm employment changes 130k. Now how does that now is going to influence the market? At the moment we can see that this is the fundamental move. Technically we saw that it's in a downtrend, right, on DXY. Now fundamentally it reverse off this support, and that reversal move, if you look at, could eventually go up further, even further up here. Therefore if you look at DXY is in this upside here. Now if we look at the gold, that you can see, all right, now it dropped down back here on gold. How do you see that move? We are not on a trade here at the moment. Still lead that one here, and with this movement, if you look at here, this is entirely, it is an entire breakup structure. Now it also defy at the moment the current technical market structure, right? It's important to pay attention, guys. It is in a strongly bull market, and the price just tested the 20 exponential moving averages. As long as it's in a downtrend here, it is a time to wait and see what the market eventually could do here. That's the key here to look at. Because if the market is maintaining this move, all right, here, the 4-hour 20 EMA just been retested, and that can push that market back above here. Okay, we take our first trade in profit. Now, there is a stronger liquidity gap here on that level. The market, if you see that, if there is a significant shift in the trend, that means if the market entirely changing its trend, that might be a drop here on gold. Okay. And the weekly market, if you look at, now we need to look at the weekly as well, lower time frame. Is the weekly open was, okay, the weekly open here is a gap, and daily chart here that you can see this is a support, and the current support is here. We seem to be forming higher highs on the 1 hour time frame by the presence of long distinguished wicks. Yeah, this is, I thought that on the lower time frame, on the high, on 1 hour I don't see any higher high here. Do you see? It's higher high, but it's forming a lower low, in fact, in that area. But this is a very long-term uptrend, and to change this one to a downtrend, it requires a significant amount of volume to come in. Now, the buyers and sellers might be a little bit confused here, really. Do you think, what's your bias? Share your bias here. Do you think it's gonna be bouncing off this, or you could see further downside? Because if this market created upside bias, I would look for buying on a pullback. Right now, we can see the market is in a key zone here. I think we mean to say more lower high. Okay, now this happened to me. That's fine, but this is what we can see in that area. It created a new lower low. Now, as the market has, it is straight drop to the order block. If you look at the 1 hour of this, it's straight drop to that order block, right? This is an order block, and with that order block, it may go ahead and potentially to create a new higher high. I think so, but we'll be waiting to see what happens. I think this is a potentially stronger liquidity grab that can happen. Now, DXY, you can see that it's creating pretty long wick candles about near the bottom of the down spike. You bought near the bottom. I would hold it because this is a very good area, especially 5018 level for a long hold. Okay, that means if I would have entered at around this zone, around to 5025, 5026, I would hold it to a lot, because that's a, if there are two possible scenarios. One scenario is this market respecting this level entirely, breaking back to the upside, going push back to the upside. The other scenario is the market is changing its trend, which is also one possible, because NFP data is significant in terms of the overall, because this data uses for decision making for interest rate decision, right? Because they are the primary indicator of the economic activities that's happening. So therefore, if you look at here, the market may react significantly with this data. So therefore, I wouldn't say that it's changing the trend, but if it does, then it might drop well below. But if it goes back again to the upside, that might be a low point here. Okay, so that might be a low point here in that area, and that may market go back here to create a new higher high in that area. That could be that XAUUSD might be going back above in that zone. Okay, here after this big drop again, it's creating this is the lower time frame market structure. This may break and then can continue to rise back above here. Little patience is necessary. Patience is the key to become better trader, guys. Keep in mind that patience is very important, especially when the market is too volatile. It's always a good idea is to wait for the market to settle down. While also you can have one, which one you want to see? This one. Have a little louder music just to settle down after the data. A good weak fill and then buying would be nice. Yes, this weak fill. So this is the current support level, and yeah, 15 minutes from very long week. Now that long week, if we need to see the some part of that week has been filled here, and once the market fill that significant long week here, all right, so that if the market feel that we cannot breaking below, that's where the market is actually preparing for continuation up here. But by the way, guys, we have traded the NFP, and I believe you entirely enjoyed this live session. We had 2 trades. We do have every single day quite a few trades, and this is just now I'm on Thursday. It might be different in your time zone. So as tomorrow and after tomorrow, both of this day, there is coming up CPI and unemployment claims. Gold is so volatile, $90 down with 2 hours. Yeah, so that's why I would like to keep a little bit of observation here now at the moment. When the market become little unpredictable, it is a good idea to remain observation, because that's where you start to see what's, if there is any shift in the market. Because when the market comes this kind of shift, that means changing the trend, creating a new pattern, you might see some kind of liquidity grab in both direction like this, going up and down. And best way is to wait for the market to settle down, to create a new direction again before you look at the entry again. I'll still be trading throughout the end of this invoice session, and also will be posting any update in the premium group. If you are there, you can get that update, and I would highly encourage you to follow every update so that you are not missing the current market information and also learning and growing as a trader with me every single day. You can check out below this video for all the updated links, as well as the website where you can find more information about to trading and as well being joining a community. That being said, thanks for joining here, and I'll see you again very soon, trading live together in our next one shortly after. Until that, stay well, stay happy.